You're listening to Voice First AI, the show where we decode how voice technology is transforming business, one smart conversation at a time. I'm your host, and today we've got an exciting lineup for you. We'll be diving into the fascinating world of AI in the crypto space, exploring essential tools, discussing risk management strategies, sharing real-world results, and examining crucial trust factors. So whether you're a developer, entrepreneur, or just an enthusiast, stick around. You won't want to miss this. All right, let's kick things off with a bit of a history lesson. AI and finance go way back. In the early days, think 1970s and 80s, financial institutions began using algorithms for trading. Fast forward to the 2000s, and things really started picking up with machine learning models being used to predict stock market movements. It was like giving Wall Street a crystal ball, or at least trying to. Then along came the crypto market. It didn't take long for the AI wizards to see the enormous potential here. Around the mid-2010s, AI began making its way into the crypto sphere. Companies started using AI-driven bots for trading Bitcoin and other cryptocurrencies. And boy, did it shake things up. These bots could analyze vast amounts of data in real time and execute trades faster than any human could. Some major milestones? Oh, we've got plenty. From AI algorithms predicting Bitcoin prices with impressive accuracy, to the development of decentralized finance platforms that leverage AI for risk assessment and asset management. Today, AI in crypto isn't just a novelty, it's a cornerstone of the market. It's optimizing trading strategies, providing market insights, and even creating new financial products. Pretty wild, right? Now let's shift gears and talk about something truly mind-blowing. What AI can analyze that humans can't. First up, we have deep learning and its mind-boggling capabilities. Deep learning is a subset of machine learning that mimics the way our brains work, using neural networks with many layers. Imagine having a superbrain that can pick up on the tiniest, most intricate details in data sets that would take humans years to figure out, if they could at all. But where deep learning really shines is in analyzing patterns in massive data sets. Think about it. With the explosion of data in today's digital age, there's just too much info for any human or even a team of humans to sift through. That's where AI comes in like a superhero. From recognizing speech and images to predicting market trends, the possibilities are endless. It's like finding a needle in a haystack, except the haystack is the internet, and the needle is any valuable insight you can think of. So, how does this differ from traditional human analysis, you ask? Well, humans tend to analyze data based on intuition, experience, and often a limited data set. We're prone to biases and can easily get overwhelmed by too much information. AI, on the other hand, doesn't sleep, doesn't get tired, and definitely doesn't let emotions cloud its judgment. It can process and analyze data around the clock, continuously learning and improving as more data flows in. This means quicker, more accurate insights without the human drawbacks. All right, audiences, fasten your seatbelts, as we're about to venture into the intriguing realm of the best tools in 2025 for predicting crypto trends. If you're a crypto enthusiast, trader, or just someone curious about the next big thing in AI, you're in for a treat. Let's start with a review of some top AI tools available now. Our first stop is the evergreen giants like Google's DeepMind and IBM's Watson. These AI powerhouses have expanded their horizons to crypto with specific models tailored to this volatile market. They can analyze vast swathes of data in moments, making sense of market sentiment, transaction volumes, and price patterns. Then there's TensorFlow, Google's open source tool that's been a game changer for creating custom machine learning models. Many traders and analysts have leveraged TensorFlow to develop their crypto prediction algorithms. And let's not forget about H2O AI, known for its rapid machine learning capabilities, which has also dipped its toes into the crypto world. Now, what about the predictions for future tools and technologies in crypto? Hold your horses, because the future's looking nothing short of spectacular. We're anticipating the advent of even more sophisticated AI models that leverage quantum computing. What does that mean? Essentially, quantum computers could process data at unprecedented speeds, making today's fastest algorithms look like snails in comparison. Couple that with AI, and we're talking about predictive models that can anticipate market movements with almost uncanny precision. And how are these tools expected to evolve, you ask? Well, the goalpost is always moving. We expect AI tools to become more integrated and user-friendly, allowing even non-tech savvy traders to harness their power. Think of it as a super smart assistant guiding your trading decisions. Additionally, AI ethics and transparency will take center stage. We can foresee the development of AI models that not only predict, but also offer explanations for their predictions, demystifying the black box that AI often is. So, whether you're looking at today's leading tools or the promising innovations of tomorrow, the intersection of AI and crypto is nothing short of thrilling. Stay tuned as these technologies continue to evolve, bringing more precision, efficiency, and transparency to the crypto market. All right, let's zoom in on a critical aspect of our crypto conversation: risk management with AI. Imagine this. You're sailing in the turbulent sea of cryptocurrencies, and AI is your steadfast captain, identifying and steering you away from potential risks before they even appear on the horizon. First up, how does AI pull off this magic trick of identifying and mitigating risks? Well, AI systems can analyze enormous data sets in real time, picking up on unusual patterns that might signal trouble. From monitoring market volatility to assessing the credibility of transactions, AI tools are constantly on the lookout for red flags. It's like having a financial watchdog that's always on duty, barking only when there's genuine danger. So, how do AI-driven risk strategies stack up against human-driven ones? Humans bring intuition and experience to the table, no doubt about that. But let's face it, we're prone to mistakes, biases, and emotional decisions, especially in a market as capricious as crypto. AI, meanwhile, offers consistency, speed, and an unblinking eye for detail. It can assess risks based on a wealth of data points that no human could possibly keep track of. This doesn't mean humans are out of the picture. Instead, AI serves as a powerful ally, enhancing our ability to make informed decisions with lightning speed. Now, let's bring this to life with some real-world examples. Take, for instance, the case of fraud detection. Financial institutions are now using AI algorithms to scan for irregularities in transaction data. This helps in flagging potentially fraudulent activities almost instantaneously, reducing the risk of significant financial losses. Then there's market analysis. AI-driven platforms can analyze global trends and news, predicting how they might impact the crypto market. Companies use this information to adjust their trading strategies in real time, staying ahead of the curve. In summary, AI and risk management is not just a futuristic concept, it's a present-day game changer. By identifying risks More accurately and quicker than traditional methods, AI is steering the crypto ship through stormy seas with finesse and foresight. All right, now let's dive into some real-world results and the red flags you need to watch out for. First up, let's talk success stories. AI in trading isn't just theory. There are plenty of case studies showcasing incredible results. For instance, several hedge funds have adopted AI systems that analyze market trends, trading volumes, and even social media sentiment. One of the early pioneers, Renaissance Technologies, has reportedly achieved double-digit annual returns using its AI-driven trading strategies. Yet, it's not all rainbows and unicorns. There are some serious warning signs and potential pitfalls to be aware of. One of the biggest concerns is over-reliance on AI. Just because a system is based on advanced algorithms doesn't mean it's infallible. There are moments when the market behaves irrationally, and AI models can fail to predict such anomalies, leading to significant financial losses. So how do you navigate through the sea of AI tools and choose the ones you can trust? Here are a few tips. First, always look for AI tools backed by credible institutions or companies with a proven track record. Second, transparency is key. Trustworthy AI systems will often provide insight into their algorithms and decision-making processes. Lastly, beware of tools promising sky-high returns with little to no risk. If it sounds too good to be true, it probably is. All right, that wraps up our dive into real-world results and red flags. Remember, while AI brings a lot of promise, it's essential to stay grounded and cautious in your approach. So let's get down to the million-dollar question: should you trust AI with your money? This isn't just about giving Wally your wallet and hoping for the best. Nope, it's a bit more nuanced than that. First, let's hit the highlights. On one side, you've got the pros. AI is insanely good at processing heaps of data super fast. It can analyze market trends, trading volumes, and even sniff out social media sentiment to guide investment strategies. Imagine having a financial advisor who never sleeps, never makes emotional decisions, and learns from every single trade. But hey, before you start picturing a utopian world where AI makes you a millionaire overnight, let's talk cons. Over-reliance on AI can be a dangerous game. Remember, these algorithms are only as good as the data they're trained on. And markets? They're fickle beasts. Sometimes human unpredictability throws AI a curveball it can't catch. Now, here's my 2 cents, folks. I've dipped my toes into the world of AI financial advisors. And let's just say it's been a roller coaster. The highs? Pretty exhilarating. The lows? A humbling reminder that no system is foolproof. AI can be a phenomenal tool, but it's not a magic wand. Use it to enrich your decision making, but maintain a healthy dose of skepticism. Ultimately, it boils down to this: do your homework, understand the tools you're using, and don't put all your eggs in one digital basket. AI is a powerful ally, but you've got to be the hero of your own financial story. That's my take, but don't just take my word for it. Weigh the pros and cons, listen to other perspectives, and form your own opinion. Trust me, folks, when it comes to your money, an informed choice is always the best choice. All right, we're just getting warmed up. Next, we're going to take a look at balancing emotional and logical decisions in crypto trading. Stay tuned. Well, that brings us to the end of today's episode of Voice First AI. What a journey it's been. We explored the fascinating history of AI in finance, ventured into the futuristic tools of 2025, navigated the stormy seas of risk management, and even pondered the trust issues of relying on AI for trading decisions. Remember, AI can be a phenomenal tool, but it's not a magic wand. Stay curious and, most importantly, stay informed. I'm your host, reminding you to check the show notes for all the links and articles mentioned today. Got questions or suggestions? Send me a message. I'd love to hear from you. Until next time, stay ahead of the curve and keep those smart conversations going.